Okay, so once you've opened up MetaTrader, all you need to do is open a new chart window. To do this, just go to the Market Watch section on the left-hand side, and then select any currency pair. Right-click on that, and then click Chart Window. That's going to open a new chart, and at this point, it doesn't matter which chart you use. We're going to be using candle charts with this system to be able to see better. So select Candle from the top, and then just zoom in a bit so that you can see the changes that you make and what they look like. And then we're going to first set up the charts themselves. So just right click on a chart and then click on Properties. And then I want you to select white background, change the foreground color maybe to black so that you'll be able to see the prices and the dates. And then go to Bull Candle and choose a green color. Doesn't really matter which color green as long as it's green. And for bear candles, choose red. And then finally, I'm just going to change the bar up and bar down to the same colors. Bar up is green, bar down is red, and then that way if I use a bar chart, it looks similar to my candle charts. And then I'm just going to click OK. And now we have a nice white background, green candles up, red candles down, so it makes it easy to see exactly what's happening at any time just by looking at a chart. And now we need to add some indicators to this chart. In this system, as I said, we're first going to add an EMA, so click the indicator button, go to Trend, and then select Moving Average. And we want to add a 60-period exponential moving average, so type in 60 beside period. And then ensure that the MA method selected is exponential. You do not want simple or smooth or linear weighted. We want an exponential moving average. And then just choose a blue color from the style. And I like to personally choose one of the thicker lines so that it's easier to see when you're looking at the charts. And then once you've done that, just click OK. And now we have an EMA 60. And the other indicator we're going to use in this system is the CCI indicator, or Commodity Channel Index indicator. So again, just click the indicator button up here, go to Trend, it's another trend indicator, and add the Commodity Channel Index. Choose a color that will show up on the white background, like black or possibly green, or just something dark that will show up. And you want to add the 14 period, so that's what we're going to add right here. And then just click OK, and that's going to add your CCI indicator, which just showed up right down here. And those are the two indicators we're going to use on this chart. I'm going to make my CCI a little bit smaller just by dragging that down. And now it's time to save these charts. We're going to want to save them so that we can apply them to any chart later. To do that, all you need to do is right-click on the chart, and then go to Template, and then select Save Template, just like so, and then type in whatever you want here. I'm going to call this Trading System 3. Just name it something that you will remember. And I'm going to click Save. And there we go. We've saved our charts. Now if I open up any other chart in MetaTrader, all I need to do to apply these my indicators and all of the properties that we just set to this chart, I right-click on a chart, I go down to Templates, and then I select Trading System 3 is what I just saved. You would select whatever you named it as, and then click that, and there we go. Our charts come up on any single chart that we do that to. So it makes it easy when you save it. You can bring it up again and look at the same charts on any of the other currency pairs simply by opening a new chart, right-clicking, and selecting the template. If you followed the steps we just took in MetaTrader itself, you should have charts on your screen that look something like this now. You have your EMA 60 and your CCI indicator. These are both trend indicators. This is a trend trading system. You're going to want to trade the daily charts to begin with, and we're going to show you how to do that in the next couple of videos. And always be sure to save your charts, and I showed you how to do that. It's as simple as right-clicking on the chart, selecting Template, and then Save Template, and then just naming it whatever you want, and clicking Save. And that way you'll be able to bring these charts up again later. MetaTrader platform. So let's just begin with the rules for short trades. We need two different criteria to be met to enter a trade with this system. The first thing we're going to look for, we want the price to close below the EMA 60. And when you're starting with this system, you should be trading the daily charts, as I said in the last video. So if you don't already have a daily chart, you should open one now. And on that daily chart, we want the price to close below EMA 60. That's our first criteria. And then our second criteria is that the CCI value is lower than minus 100. If both those criteria are met, we can then enter the trade. And when we're entering a short trade, we're going to enter with 2 lots or multiples of 2, which I'll talk about in video 5, but for now let's just say 2 lots. And we're going to set a stop loss to protect ourselves from bigger losses. We're going to use one of 2 rules to set our stop loss. We're either going to set it just above the EMA 60, or we're going to set it 200 pips above the entry point. In a faster moving market, you would probably use the 200 pip rule. Most of the time, you'll probably set it just above the EMA 60. I would set it 20 pips back or something from the EMA 60 and use that. And we're going to use whichever stop risks less money. So in a faster moving market where the EMA 60 was 300 pips away from the entry point, you don't want a pip or a stop that big. You would use the 200 pip rule. Any other time you're going to set it just above the EMA 60. And then once you're in the trade, we have 2 lots in when we enter. We're going to exit the first trade at 200 pips profit. So the first lot gets taken out when we reach 200 pips profit. The easiest way, of course, to do that is to set a take profit level of 200 pips on your first lot traded. And then for the second lot, once this first lot is taken out, we're going to set our stop loss to 0. And then we're going to trail our stop at 200 pips for the second lot. If your trading software doesn't allow you to trail your stops, just move the stop 200 pips ahead every time the trade moves 200 pips in your favor. So for example, once you were 200 pips ahead in the trade, your first step would be to move your stop loss to the break-even point. And then once you were 400 pips ahead in the trade, you would move it 200 pips more in your favor. Of course, the easiest way to do it is to use a trading platform that allows you to use trailing stops. Okay, with the rules out of the way, let's talk about some examples. I'm going to go through an example in the presentation here, and then I'm going to show you some real examples on the MetaTrader platform itself. So first of all, we have a little chart window here. We're looking at the part that I've highlighted in the screenshot. We need 2 criteria to be met. The price must close below the EMA 60. So looking here, here's our EMA 60. And this is a daily chart, and the price has closed below the EMA 60. So our first criteria is then met. We then look at the CCI value at that same point in time. So following our little red arrow all the way down here, there's our minus 100 level right there. And the CCI value is lower than minus 100. So that's our criteria met. We can now enter the trade. We're going to enter the trade with 2 lots. So we're going to go short with 2 lots. In this case, here's our entry point. We entered the trade with 2 lots. And we set our stop loss at either 200 pips back of the entry point or just above the EMA 60, whichever risks less. You're going to choose the one that risks less. In this case, it was only about 60 pips back to the EMA, and I set my stop loss about 20 pips behind that, so I'm using a stop loss of about 80 pips on this particular example. And then once you're in the trade, you're going to take profit on the first lot at 200 pips. So assuming that the trade goes in your favor, and hopefully it does, the trade is going to go in your favor, and you're going to set a take profit level on 1 lot at 200 pips. And when that lot gets taken out, when you get your first lot taken out and it's profitable, we're going to set the stop for the second lot to the break-even point. So you would move this line up here and set your stop at 0 or at the entry point for your second lot that you've left in the trade. And then you would trail your stop at 200 pips. So set your stop to trail at 200 pips and then just let the trade go. In this case, it continued on down to here, and then it came back up, and at that point our trailing stop had been dragged down and we stopped out. So let's take a look at a couple of real examples on the MetaTrader platform just to show this a little bit further and get you knowing how to really use this system well. Okay, so looking here at our first short trade or sell trade example, I'm looking at the Euro US dollar on a daily chart, and I'm looking on January 18th of 2010. There was a nice entry signal here. It actually might have been a couple days before that. Looking at this, the 15th of January, I believe, is when this trade occurred. And taking a look here, we need to meet 2 criteria. First of all, we need the price point to be, the daily close to be below the EMA 60, and in this case it has been for a few weeks, or about a week actually. And then looking down below, we need the price point or the CCI to be below the minus 100 level, and that did happen just after January 18th. The minus 100 level is the line below the center line here, so it closed below, the CCI was below minus 100 at about this point here. So if we were to enter this trade, we would have entered at about 1.4380 for the price level. We would enter with 2 lots. We would sell 2 lots and we would enter them separately. We would set our stop loss on both lots according to one of the 2 criteria we laid out before. We either set it 200 pips back or just above the EMA 60, whichever risks less. In this case, looking at it from here, you would probably set a stop loss at about 1.4535, which is just above the EMA 60. So that gives you a 155 pip stop, so you're risking less than 200, and that's what you would use on this trade. So just to lay this out here, we're going to enter at 1.4380, or approximately that. My line isn't quite on there. And we're going to set our stop loss at 1.4535, just above the EMA 60 at the point where we're entering our trade. Going up from here, we're just above the EMA 60. And we're going to set the take profit level on our first lot 200 pips ahead. So in this case, that would be at about 1.4180, about this level right there. And then we let our trade ride like that. The trade's either going to move against us or for us. In this case, it moved in our favor. And our first lot was exited at 1.4180, would have been the level, those 200 pips ahead. At that point, we would set our stop loss for the second lot to the break-even point. So we would move our stop loss on the lot that we still have in the trade to the break-even point, and we would set that to be a trailing stop at 200 pips behind. And when you did that, you would have stayed in this trade for about a month, and then it would have exited on the 15th of February or around there, at which point you would have stopped out. It got brought down to here, and then you would have stopped out here at a 200 stop split there, and you would have stopped out at about 1.3780. So about a 600 pip trade in about 3 weeks time, actually. So a nice profitable trade example. And just to give you a good example of how to use this system, let's take a look at one more example. And just taking another example here, I'm using the US dollar Swiss franc daily chart for this one. And taking a look here, we need to first establish that our criteria has been met. And our criteria for a short trade is that the price has closed below the EMA 60. So in this case, it has. And then the next criteria we need to meet is that the CCI indicator is below the minus 100 level. And again, that happened at this point here. So this trade we entered at 1.3255, and we'd set a stop loss when we entered the trade. We entered with 2 lots, and we set the stop loss for both lots either 200 pips behind or just above the EMA 60. In this case, it happened to be about the same point. So taking a look here, we set our stop loss 200 pips back at 1.3455, and we set the take profit level on our first lot to 1.3055. So 200 pips ahead, that's the take profit on our first lot. And we then let the trade run, and it's either going to move for or against us. In this case, it moved for us. And our first lot was taking out at 1.3055, so 200 pips profit on that lot. When that happened, we moved our stop loss from here to the break-even point at 1.3255 for the second lot, and we let the second lot run in the trade, and we trailed our stop at 200 pips. And in this case, it continued on, and it continued way down, dipped below the 2210 level, and then moved back up, and we stopped out at 1.2339. So this trade ended up, we made 916 pips on the second lot. We made 200 pips on the first lot. So about 1,116 pips on the trade total. Another very profitable trade and another excellent example of how to use this system. Let's talk about the rules for long trades. Largely they're the same as they were for short trades, they're just reversed. In this case, we need to meet 2 criteria again. but the criteria is slightly different. We need the price to close above the EMA 60. That's our first criteria. If that is met, then we look for our second criteria, which is the CCI value is above the 100 level. So CCI must be above 100 for our second criteria to be met. And at that point, we can enter our buy trade. And once again, when we enter the trade, we enter a 2-lot trade or multiples of 2, which I'll cover in video 5. For now, we'll just say 2-lot trade. We set our stop loss at either just below the EMA 60 or 200 pips below the entry point. And we're going to choose the stop loss that allows us to risk less. Whichever of those two risks less for us, that's the one we're going to use. And once we're in the trade, we exit the first lot at 200 pips profit. So once the trade has moved in our favor 200 pips, we're going to exit our first lot. And of course, the easiest way to do that is just to set a take profit on one lot that you've traded. And for the second lot, once your first lot is profitable, you move your stop to the break-even point, and then you're going to trail your stop loss at 200 pips for the second lot. And again, if your trading software doesn't allow trailing stops, move the stop loss 200 pips ahead every time the trade moves in your favor by 200 pips. So let's just look at an example here, and then we'll look at some examples on the charts. To begin with, in the highlighted area here, we look for our criteria. The price closes above the EMA 60, and looking here, it has. And the CCI value is higher than 100, so I've marked off the 100 level here. And again, the CCI is above 100, so our criteria is met. We can now enter the trade. And when we enter the trade with 2 lots. So here's our entry point. And we set our stop loss at either 200 pips back of the entry point or just below the EMA 60. In this case, we set it just below the EMA 60. It was only about a 60 pip stop. The currency pair was in a strong uptrend, but it wasn't moving quickly in this case. And of course, we choose the one that risks less, and in this case, we did. And then once we're in the trade, we take our first lot out at 200 pips, so the trade moves in our favor. We set a take profit level of 200 pips on the first lot. And at that point, when that the exit point is hit for the first lot, we move our stop loss to the break-even point. So we would move our stop loss up for the second lot and set it to break even. And then we're going to trail our stop at 200 pips. So as this trade continues in our favor, the stop that we've set at break-even point is going to move up with the trade and continually be 200 pips behind the price point. And in this case, it moved in our favor for a long while, and we didn't actually stop out till way over here on this chart. Let's take a look at some real examples on the Forex charts in the MetaTrader platform. Okay, so looking at a trade example on the charts here, I'm looking at the British pound US dollar daily chart, and we've got a real trade example here. Taking a look, we need to look for our criteria before entering a long trade. So once again, our criteria is that the price has closed above the EMA 60, and that did so right here. And at the same time, we need to look for our next criteria, which is the CCI level must be above the 100 level. So looking here, that criteria is met as well. So we enter this trade at 1.6071, and we set our stop loss either just behind the EMA 60 or 200 pips behind. In this case, it made more sense to set it just behind the EMA 60. So we had an initial stop loss of 1.5983. That's just over a 100 pip stop. Then we set our take profit. We enter with 2 lots. We set our take profit on the first lot at 200 pips ahead to 1.6271. And when that first lot was taken out, we move our stop loss to the break-even point for the second lot, and we let the trade ride for as long as it can with a 200 pip trailing stop. And in this case, it did so for about a month's time. And then it turned around and moved against us, and we ended up closing the second lot out at 1.6875. So that's about an 804 pip profit on the second lot, plus the 200 pip profit on our first lot. So 1,004 pips profit on the total trade. A nice profitable trade and an excellent example of a long trade. Let's take a look at one more example. Okay, so taking a look at another example here. This time we're looking at the Euro US dollar daily chart and looking at another trade example. We need to look for our two criteria first of all. We need our price point to close above the EMA 60, and that happened here. And we noticed this trade the next day, and the CCI level was above the 100 level. So looking here, here's our 100 line. It's above there. We entered this trade at 1.4823, and we enter with 2 lots. And when we're entering the trade, we need to set a stop loss. And in this case, 200 pips back and just below the EMA 60 are pretty close to the same point. So we used a 200 pip stop for this trade. And we set our take profit level on the first lot to 200 pips ahead at 1.5023. And the trade did continue in our favor. Our first lot was taken out at 1.5023, and at that point we moved the stop loss for our second lot up to the break-even point, and we let the second lot ride in the trade. It continued on for about 2 weeks' time, and it ended up stopping out at 1.5704 a couple of weeks later. So on that trade, on our second lot, we made 881 pips. On our first lot, we made 200 pips. So in about a 2-week trade, we made 1,081 pips on the trade. Another excellent example of a profitable trade using this system. And by now you should have a good idea of how to make both short and long trades. Here we're going to cover the currency pairs that can be traded well with this system. We're going to cover the time frames to use. Really, you should be using the daily charts with this system, but we're going to talk about how you can adjust it to the 4-hour charts as well. And then I'm going to give you an easy money management system. Managing your money in Forex is very important, and you should always use a proper money management system. It's the #1 way to protect yourself from large drawdowns and protect your profits and grow your account over time. So let's just start with currencies and time frames. The currency pairs that will work well with this system include the Euro US dollar, the British pound Japanese yen, the British pound US dollar, the US dollar Swiss franc, the Euro Japanese yen, and the US dollar Japanese yen. Any of those currency pairs will work well with this system. Since it's a trend system, it can easily be extended to other currency pairs, but when you're just starting out, use one of these to get started. It will help you learn it faster, and these currency pairs tend to trend for longer periods of time. For the time frames, as I said before, this system is best traded on the daily charts, but you could also use it on the 4-hour charts if you wanted to. If you're trading on the 4-hour charts, don't use 200 pip stops. Obviously, a 200 pip stop is too large for a 4-hour chart. You could use the same rules with a 50 or 60 pip stop and use it that way on the 4-hour charts. And then finally, let's move on to money management and show you an easy money management system that will allow you to manage your risk, avoid large drawdowns, and grow your account more over time. So let's just get started here. In this money management system, we're going to use a percent risk level. So we're going to always risk a consistent percentage of our account, and we're going to vary our trade size according to the stop loss that we're using. So with this system, to succeed using it, you're going to need to know your stop loss, and once you know that, we need to calculate a per pip value and use those two items to calculate the amount risk on a trade. And then using that information, we can calculate the proper trade size so that you're always trading the correct amount and risking the same level every time you trade. So let's start by calculating a per pip value. This isn't hard to do. Calculating a per pip value, here's the formula you're going to need to do it. You need to divide 1 pip with proper decimal placement, divide by the currency exchange rate, and then multiply it by the amount that you're trading. And the amount that you're trading is usually going to be either 100,000 for a full lot or 10,000 for a mini lot. And to just give you an example of how to use this formula, with the US dollar Japanese yen, we would take the per pip value with proper decimal placement. So with a Japanese yen pair, it's 0.01. With any other currency pair, it would be 0.0001. In this case, it's 0.01 divided by the exchange rate, 92.52, and then multiplied by the amount we're trading. So if we were trading 1 full lot, it would be 100,000. So in this case, it's going to equal $10.87 or 80.87 cents, or 1081 to make it easier to calculate with, per pip. And it's important to note that this is only necessary if the US dollar is on the left-hand side of the currency pair. like the US dollar, Japanese yen. The US dollar symbol is on the left-hand side. If it's on the right-hand side, such as the euro US dollar, then the per pip value is constant. A full lot is always going to be $10 per pip, and a mini lot is always going to be $1 per pip. So once we have a per pip value, we can move on and we can calculate how much we risk on each trade. Using the per pip value from before, it's 1081 is what we calculated. If our stop loss was 50 pips on a trade, then we'd be risking 50 times $10.81 equals 540.50. For every lot we traded, we would be risking $540.50. And then we can move on and begin to calculate a trade size with that number. We're going to risk a constant percentage of our account, so our trade size is calculated from your current account balance, and we're always going to limit our risk to a certain percentage, and usually you would use 2%. Some more experienced traders increase that amount to 3%, and I've even heard of some using 4%, but 2% is a good number to use all the way through your Forex career. So if your account balance was $120,223 and you could risk 2%, then we could risk $120,223 times 0.02 or 2% equals $2,404.46 on every trade. That's what we could risk on that trade at the moment. So from that, we can now figure out how many lots to trade with this current trade. We can divide the allowable risk by the risk per lot, and that'll give us the number of lots to trade. So $2,404.46 was what we were allowed to risk with our current account balance. And with the 50 pip stop, we were risking $540.50 with every lot traded. So we divide those numbers and we end up, we're allowed to trade 4.45 lots. Okay, so we always round down once we have this number. We're not going to trade 4.45 lots unless you have an account that allows you to do so. If you can trade full lots only, you would trade 4 lots. If you have a Forex broker who also allows you to trade mini lots, you could trade 4 lots and 4 mini lots. When you're trading a system like the one we just taught you, you would divide that number in half and trade 2 lots as your first lot and 2 lots as your second lot. And if you had an odd number, such as 5 lots that you were allowed to trade, maybe you would trade 2 lots as your first lot and 3 lots as your second lot and keep the bigger lot in the trade. It's not really set in stone, but you do want to try and consistently risk that 2% of your account. Okay, so just to finish up here, some final thoughts. Before trading any Forex system, practice it until you understand it well and feel you will profit from it. It's important to learn the system well. Use practice with a demo account, practice with historical data. The more comfortable you are trading a system, the more likely you are to profit with it. With every trade, always use money management. This is going to help you profit over time and avoid large drawdowns on your account. And when you're just learning any Forex system, it's easier for you to learn if you stick with 1 or 2 currency pairs. For example, stick with the euro, US dollar, and 1 other currency pair while you're learning, and then expand into other currencies as you learn to use the system well. Doing so will help you learn it faster, and it'll also help you to profit more because you'll learn those 1 or 2 currency pairs a lot better. You'll learn how they trend and how they tend to profit, and it'll make it easier for you to make money in the long run.